Hello, friends. Today we are going to discuss about the language of stock market and basics of technical analysis. This is the first lesson of this program which I am presenting. So let me share my screen. I hope my screen is visible to you. So let me put it here. so so let's start. Uh, The objective of this program is to build a skill which has the potential to make a person financially independent. So, today we are going to discuss how stock market gives you an edge to become financially independent. But for that, there are many ways to become financially independent, and this course is specially for the stock market. So, when you most of the people today in the stock market who wants to make money out of the stock market, they think that they can do it part time. They can spend some money in the stock market and they can get a good return, or they can rely on somebody else tips or advice to invest in the stock market so that they can make money out of it. But I don't believe in that. I believe in learning and educating yourself before you venture into any transaction with stock market, or for that matter any business. Stock market is also a business. It is not a side thing. Whatever business you want to do, whether you want to open a garment shop or whether you want to become any trader in the wholesale market, or whatever it is, you need to learn the basics and the knowledge of that business. So stock market is not different. It is here also you need to get educated. Okay, so the objective of this program is to make you a learned person about stock market. So this is a first uh, program, and this is the first session for that program. So this is just a note for everybody's point of view. I don't have any intention to provide you any tips or a quick scheme to make money or a large profit. This is totally an academic approach to educate and learn about the stock market and its nuances. It is like learning the language of stock market. Uh, so today you may be, I'll give you an example. Today you may speak Hindi or English, and which you been learning or experiencing that language from last 10 year, 20 year, or 30 year, or 40 year, as per your age. But if you want to learn a new language, maybe you want to learn a Spanish or French, you do a course in that language. And you don't learn just by doing a program. You learn by learning a program and then practicing that language by speaking to people in that language, and then further improving the skills in that language. So here also it is similar. So this is the basic program, or I would say basic language program of a stock market. So it's purely based on my experience and knowledge gained over the years and the books I have read. So this program is for 6 weeks. Uh, so today is first session. So this program I have divided in a week in 2 days, Thursday and Sunday evening. I have specially kept 3 days apart, because so that you can get time to practice and whatever you have learned and come up with questions for the next session. This is a totally online course. This is the fee, and timing is from 6 to 7:30. This is the course content which you already know. You already got a pamphlet where this program content is completely described. So I'll not go through it, but I'll just give you a gist of it. That here you will understand the basics of stock market. Even if you don't know the ABC of the stock market, no worries. You may be listening about stock market first time. No problem. This will give you a pretty good idea to start and kickstart the journey to become a businessman in the stock market, or become an investor or a trader, whatever it is your objective to begin with. So you'll get a complete idea. Here, I would also do some live sessions, like how I interpret market with my experience, so that you also get some idea that how to read a chart and everything. Okay. So this is a very famous quote by Jesse Livermore. He was a very famous trader uh, uh, in American Wall Street market. Sorry. Nowhere does history indulge in repetition so often or so uniformly as in the Wall Street. He was true uh, almost 80 years back or 100 years back, and with my experience, I have also seen that this statement is totally true. The Wall Street is for America. For India, it is Sensex or Nifty. So the market repeats itself, history repeats itself nowhere else, because we say history never repeats itself, but in stock market, in the history repeats. Why it repeats? What drives the market behavior? Which so that it because it repeats itself, what are the reasons behind it? Number one is the fear. It's not the like IQ or anything else which plays a major role here in stock market. Here it is the psychology of the human mind which plays a major role in stock market. So number one is the fear. Whenever you want to invest, the first thing you have fear in mind whenever you talk to somebody that I want to invest in a stock market, and you first fear is that I hope I won't lose my money, or how much money I will lose if I invest, or how much money I will make, or if market fell, what will happen. So these are all fears in our mind. So that's the one parameter, very important parameter. Second is the greed. Greed comes to every human being. We today, even if we decide that I'll make 10% on my investment, but when the time comes, the person generally become greedy and they hope for more return on their investment. So the third parameter is hope. People are very hopeful. They never rely on their plan. They become hopeful to make more money from the stock market. And the fourth is the uncertainty. So uncertainty is because we know we are living in a world where the things, we are living in a global economy where somewhere something happens. So whether, like we know there was a war, or it is still going in Ukraine. So when this war was started, the market fell. Or if something happened, like or Corona broke out in 2020 start. So then also market fell down. So we never know what is going to happen tomorrow. So uncertainty remains there. So these are the four parameters will derive the repetitive behavior of the market. So to become in any business, uh, skills are required. So in stock market, one of the most important skill which is required is the observation. Though this skill is very important in living day-to-day life and excelling in whatever domain you are, whether you are an engineer or a doctor, or a interior decorator, or you are a salesman, or whatever you are doing, this skill is very important. You need to build this skill. If you don't have that, some people this have this skill by birth, some learn it with age. So if you start developing observation, how to develop it, I'll give you a quick way to develop the observation. Like if you go to a park, try to observe what type of trees are planted in that park, what type of flowers are there, how flower looks, what type of colors are there, or you visit any place, look around, observe what is there. So it will help you in building this observation skill, because in stock market, when you will watch the chart every day, you have to build this skill so that you know how this market is behaving when similar way it behaved in the past. So you can, you can do analysis how it is going to extrapolate later. Okay, so observation is very important skill. Start developing it. Now, stock market is similar to other businesses, as I told in the start of the presentation. It is not a side thing. It needs your attention, focus, knowledge, learning, everything. Okay, so I'll explain this with an example. So, like, this is what it is. Like, something is cooking on the pot. So you, for example, you want to make some recipe. Okay, you want to make something, or maybe anything. Maybe you want to make pizza at home, or you want to make a besan ke laddu at home. So you are looking for a recipe, that how can you make best laddu at home. So you go on the YouTube and you search. So you'll get hundreds of recipes from different people, by the cooks, homemakers, by the expert chefs. So you follow somebody's recipe and you make laddus. The chances are that those laddus are become good first time. So great. If you try that same recipe again, maybe the laddus may not become similar. So you go and try somebody else's recipe. So you do hit and trial, and finally you come up with a recipe for your own, if you are really into it. But can you make a business out of it by following somebody else's recipe? Maybe one out of thousand may become a businessman in cooking by following somebody else's recipe, but I have not seen anybody. There are people who always make their own recipe, whether it is the famous Sanjeev Kapoor or Tarla Dalal or anybody. They have learned the basics, and they gain knowledge. They did courses, they did lot of things to become to become a famous chef or a cook, to do business in the cooking. So we are looking for best recipe for that thing. Similarly, in stock market, we are looking for, similar to best recipe, we are looking for best setup, best strategy, best tip, best advice to make money out of the stock market. We so we go to YouTube, or we ask people, okay, tell me what stock should I buy. Okay, or you go to YouTube, you search that how to make 1,000 rupees a day. You'll get millions of videos. You search how to make 10,000, or even how to make 1 million in a day. You will get the tips and advice on the YouTube. But that recipe is for that person. Okay, cooking something at home by following somebody's recipe at home, your money is not at stake. Max, you will have, your ingredients may go waste if that recipe doesn't work. Okay, but here, by following somebody else advice in money market, you can lose your money. So don't straight away follow somebody else's recipe. Equip yourself with the knowledge and education. So that was my objective from this slide. Now, this slide will give us a quick uh, idea about the stock market and its different terms which you hear in the market. Number one, there are two type of markets. One is primary market and one is secondary market. Primary market is where the investments are created, where stocks are created. You may have heard securities. So securities are nothing but anything which you can pledge, or you can, against which you can take money. So that's a security you are giving. So similarly, stocks are also securities. So you have, it is a securities market, or you have, so you can use these terms interchangeably. So primary market is where securities are created. Like, you have heard of IPOs, initial public offer, where companies wants to collect, or arrange money out of the market. So they float their IPO. or they go and tell people, they print their brochures where they tell why you should invest in their company. They tell how much profit they are going to make, how much profit they are making, what is their growth plan, what is their market strategy, what are their products. So you go through that brochure, you understand their brand value, and you invest in IPO. Okay, so that's a primary market where you invest through IPO. Once that IPO is floated and it is closed, that IPO listed in the secondary market. Secondary market is the actual stock market where those securities or those stocks are traded. Okay, so that's a secondary market where we do trading, investment, everything. So that's a secondary market. So now where actually you do trading? You do trading in the exchanges. Like you, so what happens in the exchange? The buy and sell is happening. So similar to you go to market and you see there are two markets, two bazaars. Maybe you can see Reliance Mart, or you see Big Bazaar. So these are two different bazaar. You can get every same product in two different places at the same price with a minor difference. Okay. Similarly, there are different exchanges. So in India, there are two exchanges. One is NSE, National Stock Exchange, and one is BSE, Bombay Stock Exchange. So NSE is new. It started in 1994 or 95. BSE is older than that. So in those exchanges, the people trade and do business. They invest. So all the stocks are listed in NSE as well as in BSE. There are very few stocks which may not list in one of the exchanges, but you consider every stock is listed in both the exchanges, uh, so that you can trade that stock. So people can decide which exchange they want to trade, whether NSE or BSE. So you need to open an account and you can trade in that exchange. So now, what are different entities or what are things which can be traded in the exchange? So stocks, which we have discussed, you can trade stocks, you can invest in stocks. Second is commodities. Commodities, any commodity, whether it is pulses or the metals like gold, silver, iron, copper, anything, or pulses or maybe grains like maize, anything you, so those are commodities, you can trade those commodities. Third is derivatives. Derivatives is future and options, which is underlying assets. They are not stocks, but based on stocks movement, you are doing trading in the market. So we'll discuss about F&O when in the later sessions. So right now we are just limited to what is derivatives. So then is the debt. Debt, you may have heard of debt funds. So debt funds is like providing, is doing like a FD. You or with a not FD. FD is a fixed deposit where your money is blocked for some period of time. But debt fund is like a fund which companies collect money for a shorter period of time and they pay you interest. So here the money is relative, is safer. But here it's a limited reward and limited risk. You get 7 to 8% of the rate of return annually on your investment. So this is also a very good instrument for a short-term, long-term gain with a limited risk. Then there are bonds. Bonds is similar to like you go to bank and put your money in fixed deposit. So their bank promises you to pay interest for a certain period of time. Similarly, bonds are also similar to that. Companies float bonds to collect money for investment, for doing their expansions and all. So you buy companies bonds and they promise you to pay interest on those bonds for certain period of time, 4 year, 5 year, 10 year, similar to that. And you can trade those bonds in the stock market. Okay, like you cannot trade a fixed deposit of your bank in the stock market, you cannot, but bonds you can trade. So unlike any other market, the price is not fixed, so it's ever changing. So it's optioning every moment in the trading hours. Okay, so auctioning, you we'll take a 5-minute break and then we'll start. Welcome back. So we'll continue the presentation. So in the last slides, we heard about what market auction. Now, what is market auction? What is auction? You may have heard of auction process in your day-to-day life, in the exhibitions or in the newspaper, that thing is set for auction. Okay, so I'll give you an example. Uh, because if you understand the auction process, you can it's something like you would understand stock market in a wonderful way if you understand the auction process. Because in market, the auction is happening every moment, every second in the stock market. So we'll take a different example so that you can understand the stock market auction. So here there is an exhibition where this Mona Lisa painting put for auction. So there is a base price where the exhibitor decided to start with the price of 1 lakh rupees maybe. And they says, okay, you have to increase the bid by uh, 5,000 rupees. So, so similar to normal market, in stock market, there is a bid price and there is a ask price. Bid is buyer, like you are bidding as a buyer, and ask price is as a seller, you are asking that this much amount I am looking for this stock or for this product. So the exhibitor says, okay, 1 lakh, the starting price. Okay, so the person starts the auction. They says, okay, 1 lakh 5,000. Somebody else stands and say 1 lakh 20,000. Somebody else stands and says 2 lakh. So this way, the auction process keep on increasing. In the room, there are maybe 100 people or 200 people, or maybe the auction in the stock market, the auction is happening online. There are millions of people sitting across computers and they are auctioning online, and they are increasing the price or decreasing the price by auctioning for that stock or security or anything. So for example, so here the last buyer raises the boli, the auction to, for example, 1 crore, 1 cr Indian rupees. So after that, nobody else raises the bar or the bid price. They says, okay, we don't find any more value than 1 cr, so we are fine not to buy, and let the person who has that auction, so that painting goes to that person in 1 cr. So what happened? So the price kept on increasing till the time last buyer sitting. Okay, so market, similarly in the stock market, the stock price keep on increasing till the time a buyer is there to pay that price, that higher price. Okay, so the price stops when the buyers are no more. Okay, so that's a very important concept. You will use it in the stock market. So now we'll take another example of a painting which is made by some child. So here the exhibitor says, okay, the base price for this painting is 1,000 rupees. So nobody raises the hand. Okay, so now 1,000 rupees is the ask price for that exhibition, for that painting by the exhibitor. So what they do, okay, there is no buyer. What they do, they reduce the price to, they say, okay, 900. They see there are no buyers, so they reduce their ask. So they keep on reducing the ask till they find the buyer. Okay, so they say, okay, 100 rupees. So now somebody sitting in the audience who knows that this painting is made by their child or their or friend, so they say, okay, we'll buy in 100 rupees. So now in 100 rupees, this painting gets sold. No, what happened? So here the ask price kept on reducing till the time they find the buyer. Okay, and the seller agrees to sell. Okay, so so when the price goes down, so it is going down to find buyers. Okay, the price goes up to find sellers. And So so in this auction process in stock market, so when stocks, when the price goes down and it reaches to a level where seller says, okay, I don't want to sell it below 100, so that means sellers are finished. Okay. And when price goes up, the buyers are finished. uh, so at that price, the stop price stops. Okay. So similar thing happen in the stock market. So you'll understand this concept in the later sessions more. So now what is price? So price, there are different prices. There is a good price, there is a bad price, there is a fair price, and there is a best price. So these are different prices for you as an individual and for anybody else. So any good price may be bad for somebody else, or maybe a fair price may be for you, a fair price may be best price for somebody, or a bad price for somebody. So you have to figure out your best price. Okay. Now, how to see what is the best price for you? For that, you need to learn the technical skills. So there are two ways to find out the best price. One is fundamental and one is technical. So for this program, our focus is on technical, that how to find a best price technically, by following the chart movements and the stock price movements. So now I'm leaving this session for the Q&A. So if you have any questions, you can ask questions. You can ask me later also if you have any question. So this program gave you a basics, a good idea about the stock market and the what are the terms used in the stock market. So this program, so you can decide to join this program, because this first session was, I decided to kept complimentary, so that you can decide whether you want to continue for this program or not. Because if you find value to this program, you can join the rest part of the program. Okay. So the idea is to teach you a new language. Now, this new language is about stock market. Okay. So you can reach out to me if you want to continue the program. Thank you.